For decades, Europe prided itself on diplomacy, economic cooperation, and a commitment to stability. Defense spending? A secondary concern. After all, NATO provided security, and the post-Cold War era seemed to guarantee peace. But everything has changed. Across the continent, governments are racing to rearm at levels not seen since the Cold War. Tensions are rising, conflicts are reshaping borders, and a harsh reality is setting in. Europe must build its own military power or risk being left vulnerable. The European Union's new ReArm Europe initiative is a staggering $800 billion plan designed to transform its defense industry. Restrictions on military spending are being lifted, massive loans are being made available for defense projects, and contracts are flooding in for companies that can provide the technology, firepower, and logistics needed to make Europe a military powerhouse. This isn't just a political shift, it's an economic revolution. A continent that once saw defense as an afterthought is now fueling a financial boom in military stocks. Investors who understand this shift early could be looking at one of the biggest profit opportunities of the decade. But not every company will benefit equally. Some firms are positioned at the very core of Europe's defense expansion, while others will struggle to keep up. Knowing where to invest now could be the difference between capitalizing on this historic shift or watching from the sidelines. Now we'll break down the key players leading this military resurgence. The companies already winning massive contracts, setting new stock market records, and shaping the future of European defense. The companies leading Europe's military transformation. European defense contractors are no longer just suppliers. They are becoming strategic assets in a geopolitical game that's reshaping the continent. Some of them have been expanding their production lines for years, anticipating the shift, while others are scrambling to scale up operations in time to meet surging demand. One of the biggest winners so far is Rheinmetall, a German company that has seen its stock skyrocket as orders for tanks, ammunition, and armored vehicles flood in. The company isn't just ramping up production, it's converting old automotive factories into weapons manufacturing plants. Rheinmetall is making sure that Germany, once hesitant about military spending, becomes one of Europe's key defense players. Over in the UK, BAE Systems is cashing in on the surge in European military budgets. Specializing in everything from fighter jets to naval ships, the company has long been a supplier to NATO and European allies. Now, with billions pouring into military contracts, its stock has seen double-digit growth. Investors betting on European defense can't afford to ignore BAE. Meanwhile, France's Thales group is dominating the high-tech side of defense. While tanks and missiles grab headlines, the real power in modern warfare lies in cybersecurity, AI-driven surveillance, and communication systems. Thales has been at the forefront of these technologies, securing government contracts that ensure it will be a long-term player in the new defense economy. Italy's Leonardo S.p.A. is another major name capitalizing on the spending boom. With expertise in aerospace and advanced defense electronics, Leonardo has positioned itself as a critical supplier for European air forces looking to modernize their fleets. As fighter jet production ramps up and new partnerships are formed, Leonardo's stock could be one of the biggest beneficiaries of Europe's defense expansion. This is not just a temporary boost. These companies are setting themselves up for decades of sustained growth as Europe commits to long-term military readiness. But before jumping into investments, understanding which sectors of the defense industry will see the most consistent demand is crucial. Now we'll explore the best strategies for investing in the defense sector, the risks to watch out for, and how to navigate the political and financial landscape shaping Europe's military future. Investing in Europe's defense boom. What you need to know. The rush to rearm Europe is creating massive investment opportunities, but smart investors know that not all defense stocks are created equal. Governments are writing blank checks for certain technologies, while others will face supply chain issues, political roadblocks, or declining demand once the initial rearmament phase slows down. One of the safest bets in this sector lies in companies with long-term government contracts. Firms like BAE Systems and Thales, which already have deeply embedded relationships with European governments, will continue securing contracts even in times of economic downturn. Another key area to watch is defense infrastructure. Not just the weapons themselves, but the logistics behind military expansion. Companies specializing in data centers, AI-powered cybersecurity, and battlefield communication systems will play an even bigger role as modern warfare becomes increasingly tech-driven. Thales, for example, is one of Europe's leaders in AI-driven defense solutions, making it a strong long-term investment. That being said, investing in the defense sector isn't without risks. Geopolitical shifts could alter spending priorities, and some contracts might be delayed or scaled back, depending on economic conditions. Additionally, the defense industry is highly regulated, meaning any changes in government policies could impact stock performance. Another factor to consider is supply chain vulnerabilities. Companies dependent on rare materials or foreign suppliers may face production delays, which could affect revenue and investor confidence. For example, semiconductor shortages in 2024 created issues for military tech companies that rely on advanced chips. Investors should look at companies that have diversified supply chains and strong domestic production capabilities. For those who want exposure to this booming sector without picking individual stocks, defense-focused ETFs provide an alternative. Funds that track European defense stocks allow investors to diversify their holdings across multiple companies, reducing risk while still benefiting from the overall growth of the industry. The bottom line, Europe's military transformation is creating one of the biggest investment waves in recent history. The companies leading this shift are seeing their stocks surge, and those who understand the long-term implications stand to gain the most. This isn't just a short-term play, it's a structural shift in European policy and economic priorities. The question is, are you positioned to take advantage of it? Drop a comment below. Do you think Europe's defense boom is sustainable, or is it just temporary? And if you found this analysis helpful, don't forget to like, subscribe, and turn on notifications for more insights into the biggest financial opportunities shaping the global economy.